Hi guys, and welcome to this very first market update on Bitcoin and crypto in general. Um, I'm going to talk about why Bitcoin is having a hard time today, and I'm going to present to you some charts, some ideas. Let's dive right into it. So first of all, let's start with this clean chart over here and draw some levels. I think this is the quickest approach to get an impression on what is going on in the markets right now. So as you can see, maybe I'm starting with the trend line. You can see we had this trend line. We didn't actually reach it. We made a top without reaching this trend line, which is a warning sign in itself. So we had this trend line too. This got broken and retested as resistance. Effectively, this was at least up to this point, it was a rising wedge. And then in this rising wedge, we saw weakness, and there was this dump taking place. In terms of levels, we can see here is a really big level. You can see this with this wick over here. It was confirmed as support, as resistance, and Bitcoin found support on this level, but got sold off in a descending triangle manner pretty quickly. This was a very aggressive sell-off. It was rather unexpected that this was this strong. I warned you guys that this is a parabolic shape, which usually breaks down with force, but this was even stronger than I had in mind. So nothing to do about that. It happens. So as you can see, we failed to hold this swing low over here. So we are looking at the next support levels, and this is the next big level. As you can see, we have a confirmation of resistance over here. It's basically the divider of this swing low structure over here. And if you don't know what I'm talking about, have a look at the drawing levels session. Quick TA session on my channel. It will help you understand how to draw these levels, how to find these exact significant spots where price is actually bouncing off from. So you can see we had a bounce here. We are having a bounce at this level. So there's everything is going according to TA. There's no real uncertainty at this moment in terms of why levels get broken without being tested properly. You can see this level got tested properly. This level is being in the process of being tested properly. So there is no irrational behavior in this market right now. It's technically it makes sense. Let's look further. If we were to drop further here, we would look at this level first. There is an untested level over here. As you can see, it is support. It was resistance. It was significant over here as well. So we are looking at, what is it? If we go lower, there's a 46.4, around 46.4. This is a very big level as well. And we do have another one. It's this one. And this is the 45 one. So this 45, 46 region is actually pretty strong support. And the support range is starting in the 48K region. So expect the 45 to 48K to be very, very well defended by bulls. If we break this easily, it's a warning sign. It's definitely a warning sign that bulls are not as strong as expected. Right now, there's no need for concern. We have a bullish reaction at the moment. Looking at the structure and considering we had a weekly market structure break, as you can see over here, when I draw this trend line, you can see it got broken, something like this. It got broken and then the sell-off started. So this was basically the panic moment for the market, and the sell-off began here. This is something which is totally expected, because this structure took us about 4 to 5 months to get here, and it finally broke down. So we have to expect strong pressure down. It doesn't necessarily need that we are. It doesn't necessarily mean that we are at the end of the bull run. This is not the case. So we have to observe how this situation unfolds. And at the moment, it's looking pretty normal. No, nothing to be super afraid of. And on the other hand, there's, of course, it's a bearish development we are seeing here, so we have to be cautious and observing. We have to keep observing the situation. It will probably change by the day. So, but first of all, you can take this zone as a very, very important support zone. If we break down, our next targets would be around here. This is the 41K region, and the next level is this one. Here we have the 38K region. So 38, 41, very, very important levels in terms of if we see a deeper correction into the untested region over here, then these levels will certainly play a very big role. To summarize my current thoughts, I think that if we see a deep correction like this, we shouldn't stay below 40K for too long. We can go there. It's not a problem for the bull run. But if we go below 40K and stay there and close monthly candles there, it's a huge, huge warning sign. We might be entering a bear market environment. It doesn't mean that we will enter a bear market for 3 years, like we've seen. It will probably a very short bear market because the bull cycle was short. So these things are always in balance. Yeah, but I think that if we close monthly candles down here below these levels, I think it's pretty much a done deal that we will see more sell-off over time. However, in Bitcoin, the bull runs were actually quite a bit different to this one. So we might see a completely new development here. We have to be open to the idea that this bull run will play out differently than the others. So I don't know how wise it is to compare this bull run with the previous ones. Of course, we do. It makes sense because a lot of variables are similar, have play the same role. But anyway, we shouldn't rely on past price action too much in this case, I think. Okay, let me get rid of this. You know the levels to watch, and I'm going to explain several charts to you that will show you why I think these levels are important. And let's start with this chart. You can see, on this chart, you can see my indicator, the bull market barrier. The bull market barrier, if you don't know what it is an indicator. It's freely available on TradingView in the public library. So feel free to add this to your chart. It's called like that, bull market barrier. And what it does, let me show you on a different chart. Over here, look at the top half of this screen. Here you can see the bull market barrier. It is basically, it's a Bollinger Band, but it's not a typical Bollinger Band. It's a Bollinger Band that is calculated a bit differently. It uses long-term data. It's actually using 600 days of data, and it's using Fib values to calculate the standard deviation multiplicator. I don't know if you know about this stuff. If not a problem. All you have to know is that this thing divides the market into bull and bear cycles. As you can see, we had this bear market in 2018 to 2020. And here you can see it was the main resistance of this bear market. And now it is the main support of this bull market. It was the main support of the 2017 and 2016 bull market as well. And it was the main resistance of the bear market in 2014 to 2016. And it was the main support of the bull market in 2013 as well. We had a dip below, but the monthly candles didn't close below, so it was not broken. It was threatened, but it was not broken, so it actually held. We could see something similar right here as well. And here you can see it was the resistance of this market over here. I wouldn't call this a bear market. Maybe, yeah, maybe you could. Yes. So you can see this thing is extraordinarily powerful and very reliable. So yeah, where are we? We just touched it. We touched the bull market barrier. This is just the top of it. As you can see, we touched it and we are about to bounce. This is a very good sign. We are still in a bull market environment, and there is strength coming in at our main support. This is the main message. This is very, very important to understand that we are still good. There's nothing to worry about at this moment. Yeah, it could fall below. Especially, we just started this downtrend. Yes, it could fall below. Then we have to reanalyze. Yes, of course, it could be that we close a monthly. For example, if we were to dump in the next 7 days below the level of, what is it, 38.7. If we were to do that, then we would have a monthly close below the bull market barrier, and this is the first step towards a bear market. So we have to observe if this happens. I don't believe this will happen, but we never know. We have to see if this plays out or not. So to stick with this chart, you can see the bull market barrier. We just bounced a little bit. We're just about to bounce. This green line is the center of gravity of the market. This is something that I've developed as well, and it is it's a line. It's similar to a moving average, but it is not a moving average. It is a line that represents the ultimate mean. So this means that it's not just a moving average that is based on, like, for example, 200 weeks of data. This is a mean based on a huge variety of different means. So it's basically a meta mean. It's a meta-analytic entity, a three-dimensional entity that, yeah, it's more scientific stuff. But all you have to know is that price is being pulled back to this entity very frequently. And as you can see, whenever we go above or below this thing, what is this? Why it's ending here? Okay. Whenever we go above or below, it doesn't take long until we return to this. So this is the same here. We are at support, and the center of gravity is above price. So we have to expect a move up, and we are currently seeing this move up. As you can see, it's breaking up. This is something that we can expect at this point. However, we are still in a very firm downtrend. It is a sharp sell-off. We could see rejection at any level, even below the center of gravity here, like this, for example. I'm going to make this a little bit more clear over here. We have a significant resistance level here. Yes, it got tested already, but this is not a real first test, as I mentioned in my quick TA session on first tests. So we could get rejected here and continue our way down. This is a possibility we have to take into consideration. Let me continue with this chart. So you know what the bull market barrier is, and that it is very significant support. The main support is here. It's the core of it, basically, and the bottom is also very strong. But here, the top coincides, actually, the top of this bull market barrier coincides with this region where we have our significant swing low structure levels here. You can see these levels are the main levels that define our swing low. They are untested, and as you can see, yeah, they cross each other. The bull market barrier crosses these levels. We have a support and resistance cross, call it like that. So we are seeing bullish pressure coming in, and this is actually quite promising at this point. As you can see, we now have this yeah, falling wedge structure. It's not exactly a falling wedge because it could break down further, but it could develop into a falling wedge. So yeah, this looks pretty good to me. I'm confident that this price action is not super bearish. Of course, it's not bullish either because we're in a downtrend. Don't get me wrong. Yes, there is danger. It could liquidate a lot of people down here, but anyway, I'm looking at it from a broader angle, and yeah, this is not something that is terrifying me at this point. So let me explain why we are seeing this rejection. Here you got 3 rejections in a row. We have this Wyckoff distribution like pattern with a U-dot top here with a failed breakout that gets rejected and initiates the downtrend. This is a very common pattern, but it is not a common pattern in a bull market, a bull run euphoria phases. This is not something that we see there. So the only logical consequence or conclusion is that we are not in a euphoria phase. This is not a final top. This is a temporary top, and we will probably bottom somewhere and go higher. This is the most logical conclusion I can come up with. Of course, I can be wrong. Don't take it too seriously. Do your own research. I can be wrong with that. It's just my gut feeling and my experience that tells me we are not at a bull run top, because this is not euphoria. Euphoria is this, like this. This is euphoria. but not this. This is too slow. So, and as you can see, a slow grind up, it will lead to a slow grind down. Not like this, a sharp drop vertical. No, this is, look, everything is in balance. If we see a move like this, we see a move like this. If we see a move like this, we probably see a move like this. So we can't expect price to drop in a vertical fashion here. This doesn't make sense at all. So if we rise like this, we will probably fall like this, and then it makes sense. Resistance is not that far away. People don't get too bearish, so it makes sense to continue higher at this point. It's reaccumulation. Somewhere in this range, we might reaccumulate and regain strength and continue higher. This is my take on the market right now, but things can change. So let me explain a little bit more about these three tops. The first one was caused by the $1 trillion market cap, the $1 trillion market cap barrier on Bitcoin. The 1 trillion market cap barrier is very significant. Let me show this to you. Where is it? Okay, the top one, as you can see here, this is the red line is the 1 trillion, and here you can see our first top, and it happened just after we crossed the 1 trillion. So what happens? Of course, it gets dumped down. It's completely normal. We see this with every kind of barrier like this. If you look at 100 billion, it's the same story. Look, we are even seeing it on total market cap on alts. It's the exact same thing. We are crossing 1 trillion and dumping down. It is, like a law in the markets. Now, this was the reason we saw this top. And look at this. This top was not enough to test these two fib levels we have over here. We have two very significant fib levels. These fib levels, let me zoom out and show you, are based on bull market tops and bear market bottoms. So I took the fib extensions from this, and I took the retracement levels from this, from the recent from the recent bear market, from all-time high to bear market bottom. So I come up with very significant levels. I took the for the retracement levels, I took 1618, 2618, and 3618. For the fib trend-based fib extensions, I took the 2 and 3. And here you can see it structures our up move very, very beautifully. Going back to the daily chart, and here you can see that the relevance was confirmed. The significance of these levels was confirmed when we had a rejection at the major 2 over here, and we found a bottom at this 1618 over here. So we saw a move down here, a move higher. We saw resistance at the 2618, but not too strong resistance, and then a rejection over here. It was too early. We should have moved to the 62,000 level over here. It's the major 3. We didn't get to this level, so we saw a dump down, threatened this 2618 over here, and then we continued higher, and now we actually tested this fib level for the first time, and a first test often leads to rejections. And this was basically the reason why we had this hard of a time in this area. Price was rejected here. It had to cross this previous high, which is very hard to do. There's a lot of downside pressure over here, so it had to exert. It has to spend a lot of fuel on the way up here. And then after making a new high, it ran into the resistance right away, and it was this super strong resistance. So a second rejection occurred, and this basically led to this trend becoming weaker, much weaker than it was before. A weakened trend was climbing higher just like that, a little bit, surviving over here. It was just barely surviving, as you can see. Then bulls tried to break out, and not only had they had to fight with this previous high, now they ran into the second fib level directly behind the first one, which is also untested, and it was simply too much at this point. Bears simply crashed it down. It was the perfect setup for Wyckoff distribution. I saw this too late. It was not easy to spot, to be honest. Now I see it. I had these fib levels on my charts on stream all the time, and I told you they were important. However, I didn't expect this to break down from 65. I thought we could see a failed breakout after going to 70K and then dumping back down. But 65 was a little bit too weak. So I didn't expect this to crash like this. But yeah, as you can see, the learning never stops. Next time I will be more careful of tiny failed breakouts. Yeah, and we broke this trend line, and then it was a done deal. And guess where we are? We are retesting the 2618. It was support here already. Now it's still confirmed as support. I don't know if it will hold. Probably not. But guess what we have down here? At 42,000, it's the major 2, which is still a level. It's tested here, but it's still a level. So we should keep an eye on that. Let's continue. Market structure break. As I showed you the trend line we have broken, but not besides the static support, the static market structure, we have also broken dynamic market structure. This is a Bollinger Band that is derived off the bull market barrier. As you can see, it's running in parallel to it. So we have been finding support on it all the way to the top, where these fib levels were or are. And as you can see, we saw the sell-off and it crashed through the bottom of this support Bollinger Band. This was a strong pressure zone, so price was under pressure. Bulls were buying it here, bears were selling it here. So it was just a matter of time until this would break out, and it finally did to the downside. Yeah, as you can see, we have now arrived at the bull market barrier. If we go lower, yeah, this is the next confluence zone around 42, but the other levels I've mentioned are also very important. There's a third reason why this is a very hard, very tough region, the 60K region. Here you can see these are the log growth curves based on the logarithmic chart, the growth curves. And as you can see, the 76.4% Fibonacci level is the green one. This was already resistance over here. It's still resistance over here. So yeah, we have met with resistance, and this is long-term resistance on the monthly chart. So this is nothing to take lightly here. Yeah, as you can see, we are finally we are actually finding support on this 618 growth curve, which was strong resistance over here and over here. So confirming this as support would be very, very helpful. But I don't know how likely that is. If we lose this, it would be a big loss. I'm perfectly honest here. Losing this after we have fought so hard to gain it is not a good thing. We could reject it in an attempt to break up again and then initiate a deeper downtrend, which would essentially be a bear market. So yeah, there's a risk of this happening. We should keep a close eye on this. Where will the April candle close? Will it be above this 618 growth curve or not? By the way, you can add this indicator to your charts by using the growth curves. It's the first one with a 3.6K likes I'm using here. So let's continue. I've already, oh, look at this, nice. Yeah, this is something that I want to talk about. You see the divergence chart I'm using on stream. I've been tracking all the bull diffs over here. You can see the classic bull diffs and the hidden bullish divergences. This is a way how to structure an uptrend with divergences. You can learn this technique by looking at the quick TA session divergence structure in uptrends. Here you can see that the RSI currently is still making a higher low, while the price is making a very, very deep new low here. It's a steep decline. This is a strong bullish divergence, and look at this. Whenever we had a strong bullish divergence, we had a very sharp move up. So I'm expecting actually something similar, but I don't know what the new trend down will cause. It could reject here and go deeper, but we could also blow up, find support, and make an inverse head and shoulder. Although I don't think this is too likely to happen here, but it is a possibility. So pointing out possibilities, nothing wrong with that, but the likeliness is still to be questioned. This is my new indicator, adaptive range indicator. You can find it here, adaptive range. FireflyTA, you can type in that and you find my indicators. yeah, this is something that showed the dynamic range we are currently in. And as you can see, we found support here. The momentum for bears ran out over here when the bands became stable in this region. It price actually established this ascending triangle over here, as you can see, at 50k, and it's currently breaking up from that, which is a good sign. So we might see a move now to the center of gravity I've mentioned earlier, which is running through here. So it's like 52.7. This would be a target. We could see a move like this and then down. This is not unlikely at all. Yeah, here, this is my indicator cloudy. I'm showing you this. This is not on TradingView, but here you can see this is a support and resistance heat map. The price is being rejected at the red and purple clouds, which represent very strong resistance. We have support clouds over here, which hold price up, and now we have seen a rejection that made price dig into this support very, very deep, and we have arrived at the strongest level of support. It's the blue one. It's the diamond color, and we are currently holding this, but closing a candle within this support is usually a warning sign. So we should expect further moves down from here. Yes, we could bounce and then move down. Also possibility it would match up with the other analysis. But yeah, it is important to keep in mind that we are seeing significant weakness here right now, but we are at the same time, we are at a very strong support. So don't be surprised when we see sharp moves up, liquidating the late shorters. This is something that very often happens in these kind of moves. Now on to the total market cap for crypto. You are seeing we just got rejected at 2 trillion, like we got rejected at 1 trillion. I just pointed this out at the market caps for Bitcoin and alts. The same story. Whenever we cross a 1 or 2 trillion barrier, 10 trillion or 100 billion, it doesn't matter. Whenever we cross this kind of barrier, expect it to hold this for quite a bit, maybe 2 days, and then we dump down. This is a very reliable indicator. Look, we cross 1 trillion on the total cap and dump down. We cross 2 trillion and dump down. But this doesn't mean the bull run is over. It's just, yes, it is a threat to the bull run, but it is not directly telling us that the bull run is over. We are currently finding support on this swing high region over here, and it's actually being bought back quite a bit. Ethereum is very strong. Some altcoins remain strong. So we have to see how this plays out in the next days, but I think it's looking pretty good. Pretty decent for now. But we have to be careful and observe. The situation can change by the day in these kind of very emotional environments as we are in right now. So if we were to drop with the entire market, the next level of support I see here is the 1.6 to 1.5-ish trillion region. It's untested, strong level, could bounce here. If we were to drop really low, yeah, this 1.4, 1.3 trillion is also very significant support here. So there's, I think the situation in terms of support is pretty good. We have to see how strong the bear momentum will be. If they can keep rejecting resistances early, then it will probably, like this, for example, what's happening here, you can see this is a level, and price has a hard time going beyond that point. So we will see. We have to closely see, this is the first level of resistance. Is this the level already that rejects price, or will it go higher and maybe reject here like this? This is a big level. Could go up like this, or to the center of gravity maybe. I don't know, but we have to look at this and reanalyze and base our decisions based on the latest data we can get. This, what I'm telling you right now, can be obsolete tomorrow, outdated. I don't know. Yeah, this is it for my first market update. I hope it was helpful to you guys. Let me know if I should continue doing these things. I'm not sure if I should do that. When I do that, I won't do daily updates. I simply don't have the time, but I could do, for example, weekly updates or something like that. If you guys really like this. Otherwise, yeah, I could spend the time probably in a better way. But if you see value in this, I will consider doing this on a regular basis. So let me know in the comments, likes, shares, whatever, in Discord. Join our Discord. It's a very nice place. Watch the quick TA sessions. They are very, 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 very valuable. Especially if you're a new trader or if you're just learning a lot of stuff. But even if you're an advanced trader, you will probably hear one or two things that are new. I bring in a lot of custom ideas, custom indicators, strategies. Yeah, I'm trying my best to be very unique there and not repeat what everyone else is telling you and what books tell you and what Investopedia tells you. Yeah, and that's it. And thank you, and see you maybe next time.